What's going to happen to real estate in 2022? Hello, everyone, and welcome back to another episode at Novarise, your channel for financial education. So, today I decided to create a video to talk about the market conditions and help you understand what to expect. So, this video was created for those who are in the market looking to purchase a home or even make a purchase for a rental investment. So, the way we're going to go about it today is that we're going to analyze an article, understand the factors that are impacting the market, what can you expect, and how can you be ready for the upcoming changes that are about to come later in the year. And towards the end of the episode, you're going to walk out of this being more confident because you're going to know exactly what to pay attention to so you can make an informed decision. So without further ado, let's just go straight into our screen. Remember to hit the subscribe and the notification button to keep getting content like this. All right, so we have this article from the Wall Street Journal that came out recently on January 20th, and it talks about the current market conditions, and it highlights that the U.S. existing home sales have reached a 15-year high of 6.1 million last year. However, housing economists are expecting the market to slow down in 2022 as mortgage rate rises. Okay, so that's the expectation that's about to happen this year. We don't know anything yet. There has been a lot of talks about the increase of mortgage rates, and all we have left is just to be prepared and informed about the subject. So scrolling down throughout the episode, I wanted to highlight a couple of things that are important, right? So U.S. home sales have gone up to a 15-year high in 2021, right? And this was caused by low interest rates, as you can see here, and an intense buyer demand, right? And the expectation is that for the first quarter, the demand is still going to be there, okay? However, there are a couple of things that you should pay attention to because some housing economists are forecasting that the market frenzy will slow down in the second half of the year, and this had to do with the rapid rise in interest rates. Okay, so this is the second article. So this article right here talks about the highest rates levels since spring 2020, right? And this is under the current market condition with, historical low interest rates. So as you scroll down through the article, it talks about how the US mortgage rates this week, and this article came out in January 6th. So in January 6th, the US mortgage rates rose to their highest level since May 2020. So the average rate for a 30-year fixed rate loan was 3.22, and that was up from 3.11 last week. Okay, so we're talking about a week prior to the release of this article, the rates was 3.11%, and a week later, it went up to 3.22. And about a year ago, that rate was 2.65. So what does that mean? Why is there so much talk about the rates? How does that impact me? What do I care? Well, the rates are very important when it comes to you being able to afford a home, right? So let's say, for example, right here, right? Let's assume you have a home at 300,000, right? And the lender is charging you a 3.22 rate. So that would means that for 300,000 at a 3.22 rate, your mortgage payments on a monthly basis will be $1,300, okay? However, if your loan was sitting at 2.65 for the same amount of 300,000, your monthly payment will actually be lower, and it would have been 1,209. So when you compare this number right here and this number right here, we're talking about a savings of dollars. So that's why everybody went crazy in this past year, because everybody wanted to take advantage of the low rates in the market in spite of the high market prices. And now back to this article. Let's move along. Home prices also grew at a record pace across the country last year, although that shouldn't be a surprise to all of us at this point. But this one was extremely surprising for me because it's highlighting that the homes also sold faster than ever, and many went under contract within a week of going into the market. Okay, so we're talking about a week of going to the market. Now, let's just highlight some of these notes right here because I find this to be really important. So pay attention to this, right? So we're talking about home prices going up at record pace. Then we're talking about homes being sold only within 1 week. So what is actually causing what's happening here? Well, as I mentioned, we have low rates, And then the article also talks about low inventory, which we'll eventually get into that. So when there's low inventory, they have to raise the prices because so many people are trying to buy the same house. So that means that whoever offers the most money is going to wind up winning that offer, right? And to add more to the equation, we also have high demand, typically fueled by millennials in their mid to late 30s. So quite important for you to remember this. And what's amazing about all of this is that in spite of everything that it's going on, right? The market frenzy, everybody is going crazy. Momentum is still expected, okay? It is still expected to remain crazy, strong, right? Whatever the word you want to use, in the first quarter of 2022. Okay, so back to the article right here. So once again, low mortgage, we already covered all of that. Large generation of millennials. The first quarter is going to be exceptional frenzy in the housing market. So what can you do? What can you expect right now? Well, very simple, right? Stay informed. So this video right here, once again, corroborates that in 2021, the expected gain of housing prices was at a 16%. Now, this year, these are the expectations, right? Shared by Redfin, the National Association of Realtors, and the MBA, which stands for the Mortgage Bankers Association. So the MBA is predicting that housing prices in 2022 are expected to rise 5.1%. Now, according to Redfin over here, things seem to change a little bit, and their prediction is that the housing prices are going to go up by 3%. So what does it mean for you? Okay, so keep this in mind. So you have housing prices, they're going to go up somewhere between 3 to 5.1%. So in essence, that means that the housing prices are going to continue to go up, right? So for those who are actually timing the market or trying to wait and see, hey, is the next crisis going to happen? Housing prices are going to fall, and then I'm going to swoop in and buy. Think about it twice. So based on the circumstances that are happening, it doesn't seem like the housing market is going to crash anytime soon. Of course, there are other issues that we are experiencing, which is the labor shortage, right? And the rising cost of building materials, right? And for those who are curious about the rising cost of the materials, what does it have to do with real estate? Well, it's very simple. The higher the cost of the building materials, the more you're going to wind up paying for the house. Why? Because contractors, builders, they need to factor in that price in order to make a profit. So that coupled with labor shortage makes it increasingly difficult for houses to be built in this market. And because of that, a lot of people are still afraid to sell even though the housing prices are high. And right here, this article can prove it to you. It just doesn't make sense for everybody to sell right now, even though home prices are so high. Why? Because everybody wants to buy a house. And because of the low inventory, that means there's not enough housing for everybody. So what will happen to a family if they wind up selling their house and then they have no place to live? So because of that, a lot of people are so afraid to sell. And not only that, the expectation is that rates are going to go up sometime this year. So what if they sell the house and cash out some profit, but then at the end, they are going to wind up paying more money for a mortgage because the rates go up. And that's assuming if they actually find a house available in the market that can meet their criteria. And that means that raising rates could deter potential buyers, in this case you, who are looking to get informed, because not only you're going to have to worry about high interest rate, you're also going to have to worry about existing home prices that are already at records high. And once again, based on what I've shared so far, the expectation is that the housing prices are not going to drop. They're going to slow down. They're not going to go up at a crazy 16% as it did last year. However, the expectation is that they will still go up somewhere between 3 to 5.1%. So now, what does it mean for you, right? So as of today, there's a lot of talk that the Fed is going to wind up increasing the rates, right? So you want to pay attention to what's going on in the market. Are they raising any rates or not? Can you, two, Are you in the market looking for a home? Can you afford to look for a home? Can you afford to pay for the down payment? Or do you have enough rental income to go ahead and buy another investment property and put it in the market and provide housing available to those who are in need and looking for one? If the answer is yes, then you should take advantage of the low rates today. Yes, I know the article says that they are increasingly going up, but hey, you do not want to wait until they go further up, because as you saw in the example, a couple of percentage in your interest rates, it's going to make a big difference between you cash flowing or you being comfortable in your home in the next couple of years to come. So again, buy now if you can, right? And then don't try to time the market, right? There's no such thing as timing the market so that you can buy the house at the perfect pricing. Those who actually didn't buy last year are actually regretting it. And those who didn't buy in 2020 are regretting it even more, because some of the mortgage rates in 2021 actually did go up. So if you can afford it, you want to take advantage of the low rates today, and you should take action right now. Now, speaking of labor shortage, I want to invite you to check out this episode that you see here on the screen on the side, so you can understand what materials are currently in shortage and how they can impact not only the real estate market, but the overall market in general. So happy learning, and I'll see you in the next video. Bye-bye.